Hi, welcome to the Market Alert for Thursday, the 30th of April 2020. So gold spikes yesterday as Fauci and the Fed distract stocks from crushing collapse in economy. Without a doubt, the economy is going to hell in a handcart and the stock market is going to the upside purely and simply because of Powell and the rest of his central bank cronies. Powell, it's not the time to be concerned about debt, and this is the right question. Okay, so when will it be the time to worry about federal debt? Also, we see explains how he saved the world, and stock and dollar and bonds drop after Fed statement only temporarily. Powell promises Fed remains committed to use every tool to save the world from virus, considerable risk, and punts IOER. Federal Reserve will continue to purchase Treasury securities and agency residential commercial backed securities in the amounts needed to support smooth market functioning. What a load of crap this is. It's enough to make you vomit, isn't it? I mean, all they're doing is just printing and printing. We're close to 23 trillion debt in the US, and we've got 7 trillion on the balance sheet, doubled in the space of 3 or 4 weeks. After the last 12 years, and it's just, honestly, it makes me feel physically sick when I read statements like this. You know, people sick, 26 million people have lost their jobs, plus today we've got the unemployment claims once more, and we're looking at a potential of another 3.5 million, and these central bankers are printing money like it's gone out of fashion to look after Wall Street. But like I say, I don't want to get political about this. I just find these sort of cliched statements that are always pulled out at these times. We'll do whatever we can to save the world and save you from the virus. I mean, as if printing money is going to save you from a virus. This is the other thing that you constantly see. You know, well, we'll print money, to save you from the virus. It's bizarre. But there you go. So we've got the unemployment figures today at 130, so keep an eye on those. So let's have a look at yesterday and see what happened. We'll start with the daily chart. We can see that we went straight through the 24,441, the resistance level that we had marked up yesterday. We've gone through this and now we're heading to the 76% retracement. Given that there is a pattern emerging at the moment when we have negative figures from the economy, they tend to throw out another statement right at that time that is positive with regards to the virus or printing more money. And this happened yesterday, and I'll come to that in just a second. But looking at the bigger picture, there's nothing to stop us going to the 200 MA or to the 27,079 at the moment, which is where the sell-in came in. The market bounced here, having the initial impact of the COVID virus on the market. It bounced towards the 200 MA, and then once it closed back below the 5-bar moving average, it then fell out of bed. So there's nothing to stop the market from doing this. And also, I'm just going to remove all of these other lines now that we don't need them. And I'm going to show you and add in a few more. So if we go back to the all-time high, which is there, down to this low, and then I'm just going to drag these across. You can see here, the sort of short term here, these two areas are going to be significant. The 76% is drawn from here to here, which we are currently at, and the 62% retracement is drawn from the all-time high from this low. So given that we've got 76 here and the high over here and the 200 MA, this area is going to prove difficult to move the stock market through. So keep an eye on this. If I just remove this, then take a screenshot and keep an eye on these levels as prices attempt to move higher. So let's have a look in a bit of detail what happened yesterday. I'm going to go to the pre-market session first because we had the release of the GDP figures, if you recall, at 1:30. They were forecast at -4, if I recall. Yes, they were indeed. This is yesterday They were slightly delayed yesterday as well. You can see there, 132. I kept clicking on the refresh button, and they weren't released immediately. And the market started to move higher. And I thought it was odd, but they were forecast at minus 4.0. They came in at minus 4.8. Which you can see takes you all the way back to 2009 there, and we really haven't got going with this yet. You'll see this down in the region of around minus 30 by the time we finish, and that's why I'm saying you can bring the market up at the moment, but when the reality kicks in following the lockdown and businesses don't reopen, then it's going to be a different picture. This is the calm before the storm as far as the market's concerned, and the devastation within the economy. So we've got this at minus 4.8, and we saw the market move to the upside, which we see there. And I thought, this is strange, and then did a bit of research, and the futures had been moved higher on the basis of a comment by Fauci, the US medical scientist, where he's been touting remdesivir. There was a study, there was only marginal survival benefit, but he deemed it necessary to actually make this statement at the same time, which is why it was delayed by 2 minutes. And so let's bury the bad news with some potentially good news. And I say potentially because obviously you can see it's BS by what it says here. It's only it suggests. Let's always look for this word. This is a great word. This is could, would, maybe, and suggest. Suggest is the one that they use an awful lot. Suggest the drug can stop COVID from progressing. You'll see this word used all the time in the mainstream media. And most people's brains just gloss this out, and they would read it. They added that the study can stop COVID-19. So always watch for this one. It's a fascinating one where studies are concerned. And you'll hear it all the time. A new study shows is the other one as well. But I don't want to get into the psychology of the mainstream media's sound bites. But so this was enough to send the market to the upside there. And then in the main event, we see prices open. We see the buying come back into the market. And we get the usual retracement. As you'll see there, the market manages to rally, but then has to come back. And we go into these areas of Fibonacci supports, and then the market is moved to the R2, bouncing nicely in swings of 76% and whatever, 89. And then we get the FOMC minutes are released, and we've already seen from these screens here what happened with Powell saving the world. And printing, are going to do whatever he can to print. So we had all of that nonsense as well. The market managed to move higher again once it had retraced. You can see there down to 62.78, and then back up to, guess where, 78.89. Just move those along for you. And then the market came back before the close. And you can see this pattern all the time in the markets. And then back to there as well. So overnight prices have moved higher. No surprises to there really. And again, you can see the pattern, and then moving back to the upside. And we can expect this to continue. But like I say, the bigger picture is very important. It's very important to see here. But for the time being, they can continue to move the market to the upside. If I can find what it is I'm looking for, implied volatility, you can see is making its way down. The option sellers at the moment don't see any too much risk on the downside, probably because they're looking at the same thing that I'm seeing at the moment. I don't say that with any conceit. What I mean by that is that from a technical analysis point of view, you can see where this is playing out at the moment in the bigger picture. And that's what and anybody that's an option seller, you look at the bigger time frames to see if you can sell those options with unlimited risk to those who want to buy them. So that's about it really for this one. I don't think there's much else to say apart from the criminal is out today at 1:30. the main refinancing rate of the ECB was going to remain unchanged. They can't do anything. All central banks are destroying the financial system with their 0% interest rates and printing money as confetti. So yeah, let's wait and see. But the big one for the day is the unemployment figures out at 1:30 there. So keep an eye on those. Okay, that will do it for this one. And if there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.